Welcome back, guys. As you may know, chatgpt, the new AI of openai, is very popular today. So I decided to ask to this AI some investing questions. Let's see if this AI knows how to invest. First of all, I asked it, do you know how to invest? It told me yes, that he has some knowledge about investing. I asked it, what about investing in Standard & Poor's 500? It explained to me what the Standard & Poor's 500 is, as you may know, a stock market index, and he thinks that investing in this index is a good way to diversify your investment portfolio and to potentially earn a return. I think this is a good answer. Then I decided to ask him about a comparison between different financial assets. So, stocks or bonds, which is better? This AI thinks that investing in stocks or bonds depends on your financial goals and risk tolerance. And then he started to talk about stocks as a financial asset with a higher return than bonds, but more risky, and bonds, on the other hand, as a lower risk investment, but with a lower return. It told me that it's a good idea to have both stocks and bonds to diversify, and of course, consult with a financial advisor. In other comparison, stocks or real estate, which is better? And again, almost the same answer. Depends on your financial goals and risk tolerance. Stocks probably will give you a higher return on your investment. Real estate is a physical asset. It has its own set of risks. And of course, real estate involves maintenance and management costs. And again, this AI suggests a mix of stocks and real estate. And again, consult with a financial advisor. Let's see what AI thinks about stocks that pays a dividend. Stocks that pays a dividend or stocks that doesn't pay it? Which is better? What do you think? Its answer is great, because it thinks that a stock that pays a dividend can be more attractive for investors if they want a source of income. But not paying a dividend can be better when it comes to returns, just because the company can reinvest its profits instead of paying dividends. Great answer. But again, he thinks that it's a great idea to have a mix of stocks that pays dividends and stocks that don't pay dividends. And again, consult with a financial advisor. The most important thing when it comes to public companies is how to value a public company. So I asked it. It told me that there are different methods to evaluate a public company. Price to earnings, price to book, discounted cash flow. This is my favorite method. And net asset value. When it comes to price on earnings, it told me that a higher price on earnings may indicate that the company's stock is overvalued. A low price on earnings may indicate that it is undervalued. Price on book. A higher price on book may indicate the stock is overvalued. A lower price on book may indicate that the stock is undervalued. So, same thing between price on earnings and price on books. Discounted cash flow. This is my favorite method, because you value a company based on its expected future cash flow. And I suppose, as you may know, that cash is king, as always. Net asset value method. You subtract liabilities from assets, you divide the result by the number of shares. And again, it's a good idea to use multiple valuation methods, and again, consult with a financial advisor. Alright, this AI are telling me to consult with a financial advisor, and again, try everything. Mixing everything up. Best strategy to invest? Tell me about it. He told me that there is no best strategy to invest. He told me about diversification and reviewing and rebalancing my investment. And of course, having money for emergencies. And again, consult with a financial advisor. During a recession, which financial asset should I buy? Its answer, I think it's a special answer. It just told me about cash, short-term government bonds, and high-quality corporate bonds. No stocks, no real estate in its answer. But there is a problem. Cash is the most liquid and stable financial asset, and it's not subject to market fluctuations. It's true. However, it also offers the lowest potential return on your investment. Cash is not an investment. Cash, due to inflation, loses its purchasing power over time. The only situation where cash increases its purchasing power, so We can look at cash like an investment. It's when there is deflation. So prices of goods and services are going down, and cash, it's increasing its buying power, its purchasing power. But when there is no deflation, cash is not an investment. Last question. I think this is the best answer this AI gives to me. Can AI be a better investor than human? This AI thinks that AI can be a better investor than humans in some ways, because AI can process large amounts of data quickly and can try to predict financial markets, but AI lacks the ability to think creatively and to make subjective judgment. So AI thinks that the best thing to do again is to have a mix of AI and humans. So it's likely that the best approach to investing will involve a combination of human and AI technology. Again, its answers are mix things up. It's the best way. And of course, consult with a financial advisor. I hope you liked this video, guys. Subscribe, leave a like. Thank you for watching, guys. See you next time. Bye.